you ever thought about what strategies successful traders use to consistently find the best entry and exit points and maximize their profits from the market? In this video, we're going to explore one of these strategies together. So without wasting any time, let's get started with today's scalping strategy. After selecting your symbol and time frame, you need to go to the Indicators tab to add the first indicator to your chart. For this, simply search for Now just click on it to add it to our chart. After that, we need to go to its settings and make some adjustments. These changes are only in the style section. As you can see, this indicator has two lines. The upper line represents the highest price from the previous day, while the lower line represents the lowest price from the day before. This indicator may provide us with a few entry signals, but their accuracy is high and we can use this indicator on its own. In areas of the chart where candles break the upper line and cross it, a buy signal is generated and we can enter buy trades at these points. Conversely, in areas where price candles break below the lower line, which is the lowest price from the previous day, a sell signal is generated, allowing us to enter sell trades at these points. You should note that this indicator only produces signals when the previous day's price is broken. Otherwise, no signals will be generated. You can still be profitable in the market with just this indicator and grow your accounts. However, to achieve better results from this strategy, we need to add a second indicator to our chart. For this, go back to the Indicators section and type Corrected Moving Average. Select it to add it to our chart. After that, we need to go into the indicator settings and make the adjustments you see. We use this indicator to identify trends. When price candles are above this indicator line and the line is green, we understand that our trend is bullish. Conversely, when price candles are below this line and it turns red, we know we are in a bearish trend. Here, we should aim to conduct our trades according to the trend we are in. Now that you have learned how to use these indicators, it's time to combine these two indicators and utilize this powerful strategy. But before that, don't forget to subscribe to the channel and hit the bell icon. Well, now we should start with buy orders. First of all, we need to make sure that we are in an uptrend. After that, you should look for a point when the price candles have broken the previous day's highest price line upwards. If you see these conditions, you will realize that you have found a suitable entry point for a buy trade. Now you can set your stop loss just above the last swing low or consider it below the green cloud. At this point, we enter the buy trade, and for the take profit, we just need to set our risk to reward ratio to 1 to 1.5. Now we should wait for our trade to close with a profit. For sell orders, we first need to look for a downtrend. After that, we should find a point on the chart where the price candles have broken the previous day's lowest price line downwards. When you see these conditions, you will understand that you have found a suitable entry point for a sell trade. Now just set your stop loss slightly above the last swing high. Now we can enter the sell trade, and for the take profit, we can also set our risk to reward ratio to 1 to 1.5 and wait for our trade to close with a profit. The last point I want to mention is that there are two situations where you should not open a trade. One is when prices are between the highest and lowest price lines, and the other is when there is an uptrend but the candles are below the green line. Don't forget to pay attention to these 2 points and not overlook them. Until the next video, goodbye.